I want to get over to Emily McCormick again because Emily has this really interesting story out on the Yahoo Finance website, taking a look at the historical perspective, the 17 stock market crashes since 1870, in case you were actually keeping note and counting. So, Emily, what did you find? Are there similarities this time to all those other times? And how do we climb out of this? Can we look to the past for a little guidance?
Well, one of the first things to note, Alexis, is that there are really two main takeaways when we look at this data, at the 17 past stock market crashes or declines of 20% or more from recent peaks over the past 150 years. And the first is really that this is what market risk looks like. We had bear market downturns about every 9 years or so. So they aren't necessarily as anomalous as you might think. So even with the steep declines that we saw this year, it's something that has happened about every decade or so for about the past century. So the other takeaway is that if you have the time and the patience, you can still reap large rewards from equity markets. And one of the things that I pulled away from this Morningstar data was that a long time horizons tends to be helpful. In one specific example, we had Morningstar citing that $1 in 1870 US dollar terms invested in a hypothetical US stock market index back in 1871 would have grown to $15,303 by the end of March 2020. And that's even with that downturn that we saw at the end of the month. Now, of course, we don't have any single human investor who has that kind of time to stay in the market. But even looking more recently, if you were an investor who bought at the stock market peak preceding the 2008 to 2009 financial crisis, that was the close of October 9th, 2007, you would still be up 43% on just capital appreciation alone as of this year's closing low on March 23rd. So that really gives you a sense of a long time horizon being beneficial for investors. That doesn't mean that you aren't going to have to withstand a bumpy ride. The stock market, of course, was down 50% during that 2008-2009 market bottom. So as long as you have the stomach for these kinds of drops, eventually stocks always do, or at least in the past, they have always risen back to prior peaks and gone on to make new highs.
Yeah, sometimes we need an iron stomach to get through it. But Emily McCormick, they're making the case for if you have a long time horizon, painful times like these can really pay off. Emily McCormick, thanks so much.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.